Welcome to the latest Motley Fool Scoreboard. I'm Anand Chokkavelu. We've got longtime fools Tyler Crowe and Nick Sciple giving a 1 to 10 rating to the company that should just call itself Sam Adams already. It's Boston Beer, ticker symbol SAM. Rate the strength of Boston Beer's business first, including factors like industry and competition. A 10 is invincible. A 1 is hopeless. Lower scores than you would have thought, maybe. Nick's at a 4. Tyler, you're at a 5.
I mean, and it's not just Boston Beer that I'm kind of scoring here. I'm kind of doing industry writ large. Like, talk about a tough decade for the booze business. I mean, you'll be hard pressed to find an alcohol-based company that has produced market-beating returns. You're even lucky to find one that's generated positive returns over the past 10 years, which it kind of speaks to the challenges of this business. You know, unlike other vices like cigarettes and things like that, the preferred vehicle for alcohol consumption changes with like consumer taste. One time it's beer, one time it's wine, cocktails. We had seltzer for a while. But, you know, Boston Beer has made several good moves to meet those consumer trends, but, you know, it spends a lot of money to do that. But, you know, the companies in this industry are always going to be chasing trends rather than just being, I don't know, cranking out the same cigarette for 57 years.
Yeah, I went a 4 for much the same reason. Really strong brands like Boston Beer and craft beer and Truly in the hard seltzer category, really strong free cash flow. But revenue and net income have shrunk since 2021, largely as the seltzer boom has tapered off. And if you look longer term, alcohol consumption is trending down. In the younger generation, things like zero alcohol and cannabis beverages are starting to eat into the market share. So while the existing brands and business are robust, the industry is challenged. I think alcohol is a secular decliner moving forward. And for that reason, rated Boston Beer a 4.
Even within the beer industry itself, you've got all the different microbrews with the new different labels and the dodgy sounding names, and it's tough. Let's talk about management. A 10 is Warren Buffett. A 1 is Homer Simpson. Nick's at an 8. Tyler, you're at a 7.
Yeah, I'm really of two minds here. Because on the one hand, I can really appreciate management's ability to identify the changing trends in alcohol consumption. Like we talked about beer, seltzer, they had like that thing with hard cider for a while. Then there was hard teas, hard lemonades. Like they all kind of, you know, Boston Beer kind of stepped up and met the market for those. And now more 85% of the volume at Boston Beer Company is non-beer. So I guess they shouldn't change to the Sam Adams because it's like only 15% of their revenue these days. The challenge with this, though, is that it's spreading all of its resources around multiple fronts that can dilute the quality of its core products. You know, being a brewer is very different from putting, I don't know, vodka in a or malt liquor in a seltzer or something like that. It's just a different business, got to spread the assets around. And I don't know, maybe this is just like me being a grumpy Gen X type person for somebody who really enjoyed like the indie craft beer phase of Boston Beer Company. But I've kind of been a little less impressed with the recent offerings. I don't know, maybe they've just gone too corporate, man.
Yeah, so I rated CEO Jim Koch and founder an 8. He helped create the craft beer category when he founded the company back in 1984. And as the craft beer wave was cresting, he identified the hard seltzer trend and some of those other categories Tyler talked about. He's built Truly, it's that brand, into the number 2 player in the hard seltzer category. While he can't control the broader alcohol consumption trends we talked about off the top, Koch has done a great job, about as good a job as you could ask for, navigating the industry over the past 40 years.
If you're wondering, like I was, what's making up that 85%? It's stuff like Truly and Twisted Tea, Angry Orchard, those kind of drinks. I would have guessed a much higher percentage for beer still. Let's move on to financials. A 10 is a fortress. A 1 is yikes. Both of you have 7s, Tyler.
Yeah, Nick's going to get into the kind of the nitty gritty of the numbers a little bit more than I will, and I'll let him do that. But for me, there's like the past few years, there's been this element of like, there's always something in each of its earnings releases with a bunch of like one-off expenses that seem to keep popping up. It's like impairment of intangible assets, impairment of brewery assets, contract settlement costs, like you name it. There's an unusual or a one-time expense that always seems to keep popping up. And it gets to a point where like, you know, these aren't non-recurring anymore when you have them like 5 years straight. And they've really been eating into profitability lately. If you look at the numbers over the past 5 years, they went from, you know, relatively steady operating earnings to pretty sharp declines in net income because of these unusual items.
Yeah, I rated financials a 7. As we mentioned off the top of the show, revenue and net income down over the past few years, driven by, the peaking of the hard seltzer trend and just broader alcohol consumption declines. That said, the balance sheet still healthy with $150 million cash and no debt. That's if you exclude finance leases. Its cash flow is robust, got about a 6.8% free cash flow yield as the stock sits here today. So while there hasn't been much growth the past few years, the existing business not really at any risk at all, and its cash flow profile has allowed the company to buy back shares aggressively. They've reduced shares outstanding by 9% over the past 3 years.
Nick, let's move on to valuation. How well will Boston Beer's stock go over the next 5 years? How safe is it, keeping in mind a 10 is a sure thing, 1's a lottery ticket?
So I kind of punted here. I went 5 to 10% returns with a safety score of 7. While the growth is challenged, I think this is a capital return story, as the buybacks I talked about earlier profile at a 6.8% free cash flow yield. If you're returning all that cash to shareholders, that translates to the mid-single digit returns that the 5 to 10% range gives you. I think those are relatively safe given the cash flow profile of the business that I laid out earlier. That said, if the alcohol industry declines further, my prediction could be too optimistic for that reason. But I think the company, what they can control, they're going to control in a good way.
So here's funny. Back when I started with the Motley Fool, and Anand, you were my editor. Sam Adams was a darling stock, and basically from the day that I started the Motley Fool to today, the total return is 0. So that's like 12 years of no returns. That's why I went 0 to 5% with a safety score of 5. Look, the alcohol industry writ large has been struggling. So this just isn't a Boston Beer Company story. I don't know what is going to be the catalyst that turns this trend around for Boston Beer or anybody else. I think it will continue to be profitable, and that's fine, but that's not necessarily a winning formula, especially for a company that trades at 35 times earnings. So.
Time for everyone's favorite. Top it. I know Tyler's going to have something. Nick, is there a company in Boston Beer space that you like better?
As we mentioned earlier, the alcohol industry is challenged. So, for my company I like better, I'm going to look outside the alcohol industry to a company called Turning Point Brands. The ticker is TPB. Although it's not in the alcohol space, it sells age-restricted products, and its end market's much more attractive today than the profile we laid out for alcohol. It's the publicly traded company most exposed to the white nicotine pouch trend, headlined by Philip Morris's Zen. Turning Point brand sells free and Alp nicotine pouches. A nicotine pouch category has grown rapidly to date, expected to grow through the end of the decade at a 30% compound annual growth rate. So lots of attractive growth in the nicotine pouch industry. Also, Turning Point brands exposed to cannabis through its Zigzag products segment. We're the number one rolling paper brand in the U.S. Turning Point brand similar to Boston Beer in that this is a small player that has a proven history of carving out success in its niche against even much larger global competitors. But as I laid out earlier, I think its end markets are much more attractive and the growth outlook is more attractive as well. So for that reason, I prefer Turning Point brands to Boston Beer today.
All right. Well, since Nick cheated already, I'm going to cheat too. All right. So I'm going to do Louis Vuitton Moet Hennessy. LVMH. It's actually not traded in the U.S. It's traded on the French exchange, but you can get a pink sheet there. They have an alcohol brand in the name, so I'm cheating less than Nick. So points for me on that one. But this is, it has luxury brands in apparel, accessories, alcohol. It kind of covers basically the upper echelon of society in some way or the other. Its business has struggled a little as well, like Boston Beer lately, because there's been a pullback from Chinese consumers and elsewhere, but primarily Chinese consumers, especially with a lot of its alcohol brands and Louis Vuitton. But it has much better returns over the long term than Boston Beer. And, basically any metric you want to do, margins, sales growth, anything like that, it's been better than Boston Beer. And it still only trades for about 20 times earnings. That's the benefit of not being traded on the U.S. exchange. Nobody knows it there. My one wish with stock ownership is that I could get a bottle of Chateau de Cheval Blanc every year. But hey, that's a quibble.
Well, thank you to both Tyler and to Nick. They've given Boston Beer a low overall score of 5.8 out of 10. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up is Ulta Beauty. Till then, Fool on.
apparently that's like a big thing in Japan, the shareholder gifts. Like there's like a whole industry of it. And like if they get rid of the gift, they'd rather them get rid of the dividend than get rid of the shareholder gift. Like it's a whole part of the culture there.